Okay, so today marks a new day in our course. We're actually changing the type of business that we're going to be doing accounting for. Back in the first semester, the focus of our accounting work was we were working for what is known as a sole proprietorship, a one owner business. And not only was it a one owner business, but the type of business was that the businesses that we worked with were all service oriented, meaning that the way they earned money was they provided some sort of skill or service. They applied their knowledge and expertise in a certain area, whether that was in law or being an accountant or whatever the case is. Their service that was provided for clients was how they earned revenue, and we called that a fee that was paid for their services. Well, when we start chapter 9, and this will be true for the rest of the course, the type of business, the business structure, organization is going to change. We're not talking about a sole proprietorship any longer. We're going to be talking about a corporation, and a corporation is typically a larger business structure. It's going to require more capital than what a sole proprietorship, which is typically a smaller operation, smaller entity. A corporation is larger, which means we need more money, we need more capital for getting the thing up and running, day-to-day operations. And so we're going to talk in more detail as we go throughout this semester about the differences in accounting records. There are some similarities. Some of the accounts that we used in first semester, we're still going to use them again, but we're going to add quite a bit to it because of, again, the size of the organization, the way capital is arrived at. A sole proprietor typically has a business owner that provides his own money, or maybe he has to go out and borrow money. But pretty much the capital is all about him. He provides the money that's needed to put into the business for day-to-day operation until he gets enough revenue to where that revenue can sustain day-to-day operations. Well, in a corporation, the capital is arrived at by issuing shares of stock primarily. And so we're going to talk more about that later. But the whole structure, it's a larger structure. Another big difference between a sole proprietorship and a corporation, if you run into some legal issues as a sole proprietor, maybe you performed a service and you end up being taken to court by one of your clients, they pretty much are suing you personally as the owner. Whereas a corporation has all of the rights of an individual, but if the corporation gets sued, then they're suing the name, they're suing the actual corporation and not an individual person. So you have a little bit of protection there if you are one of the stockholders versus being a single owner where you're bearing the brunt of all of the liability that should, if someone should be displeased with your work and have to take it to court. So anyway, that's something else that's a huge difference between a corporation and just a sole proprietorship. So to get things started, we're going to do 2 lessons today. The first one is really short, lesson 9.1. And as you see on my slide here, the big takeaway from lesson 9.1 is this. We are going to be dealing with another ledger, and in a future lesson we'll add to this. But for today we're going to add another ledger, and it's called the accounts payable ledger. It's known as a subsidiary ledger. Just think about the word sub, the prefix sub means under. So this accounts payable ledger really is another ledger underneath, if you want to think of it this way, the accounts payable account that we're already used to in the general ledger. Okay, so the whole idea is this, pretty simple concept. We're going to have this accounts payable ledger that will be a listing. It'll be a separate ledger all to itself that will be a listing of all the people that we owe money to, who we owe and how much for each person, each company. All right, and so that'll be listed out in this ledger. And the total, so let's say we owe 6 different people, and the total of what we owe those 6 people is $2,000. Okay, so you add up all 6, and this accounts payable ledger represents a total of $2,000. Well, in the accounts payable account in the general ledger, which is what we're used to working with, then that is just one account, but it also should have a balance of $2,000. So the big takeaway here is it's 2 different ledgers, a subsidiary ledger called the accounts payable ledger that should match up to the accounts payable account in the general ledger, and that's why we call this one the controlling account. It's basically this one should add up to this one. So this is the one that we're going to take a look at and make sure that this accounts payable account should be in agreement. Okay, so we're going to just make sure that these 2 different, this subsidiary ledger matches this account, accounts payable account, in the general ledger. So a couple of huge terms: subsidiary ledger, controlling account, 2 of the many terms that you're going to come across as you go through Chapter 9. Okay, so that's the big takeaway. So let me just get you started. You're going to do eventually you're going to do an on your own problem for Lesson 9.1. So what I'm going to do with you is this work together problem. So I'm on page 248 in your textbook, and in your workbook you can turn to page 201. 201 in your workbook, 248 in your textbook, and this will just take you maybe a minute or 2 when you do the on your own problem. It's very much like what we're about to do here with the work together. So the instructions are, this is all about setting up this new ledger called the accounts payable ledger. Here's what it looks like. So you see that all it is a list of people we owe, and they're called vendors, businesses that we owe money to. All right, so I'm just going to read through the text, and you can follow along with me. The first instruction under Work Together 9.1 is to start a new page for an accounts payable ledger account for Warren River Supply. Okay, so we're going to put Warren River Supply as our vendor. And the account number for Warren River Supply is 240. All right, and the balance on October 1st of the current year is given. So we'll do 2021, October, and 1st. And since this is a brand new balance, I'm going to write the word balance in the item column. So this was brought forward from a previous month. And remember, accounts payable has a normal credit balance, so I'm not going to put anything in the debit or credit because that would be something that would be posted from a journal. I'm not posting from a journal here. I'm just basically bringing forward what was owed to them from the previous month. So in the credit balance, I'm going to put $14.89 and 50 cents. And since I'm not posting again from a journal, then I'm going to put a check mark here for the post reference. Okay, so let's do number 2. Instruction number 2 right below that says start a new page for an accounts payable ledger account for Zodiac Industries. So Zodiac Industries will be another vendor. And we're told that it's a vendor number 250, or it says account number, but same thing. All right, and for this one, again, on October the 1st of the current year, so 2021, October 1st, it is a beginning balance. It's not coming from a journal posting, so I'm going to put post reference check mark. And the balance in this account from September the 30th was 2491.80. 2491 and 80 cents. Okay, and so that's basically it. Like I said, this will take you maybe a minute. When you do the on your own, you're going to have two different vendors to set up. But the key takeaway, I guess, here is realizing that this isn't posting from a journal, so you're not putting anything in the debit or credit columns here. You're just basically bringing forward a balance from the previous month. And this is a little bit new too. We typically don't write things in the item column unless we're doing adjusting or closing entries. So that's a little different than what we've been used to seeing in the past. Okay, so that takes care of, you're ready to do the on your own 9-1, which is still on that same page, and then you know where it is in your workbook. So let's talk about 9-2, and that's as far as we're going to go. For 9-2, we're going to be introduced to a new journal. So one of the things you're going to realize in this new semester is there's a bunch of different journals that we use, and your job is going to be to read a transaction and know which journal needs to be used based on a transaction. All right, so in first semester it was pretty easy. Everything that we did, for the most part, if it was a daily transaction, we just used that one multi-column journal. Well, in second semester, again, it's a different accounting structure. And so we're going to have several. We're going to learn a handful of different journals over the next several chapters. And so it's going to be your job to know, read a transaction. Oh, yeah, I can tell based on that transaction, I'm going to use this journal. And, oh, okay, I recognize that transaction, so this goes into a different journal. All right. And that usually is the challenge for most people, is knowing which journal to use for particular transactions. All right, so the journal that we're going to use in Work Together 9-2, so you can go ahead and turn over in your textbook to page 254, page 254 in your textbook, and I'm on page 203 in your workbook. Okay, now on your workbook, you see a purchases journal, and then you see a cash payments journal. We're not ready for the cash payments journal today. All you're going to need for today is this purchases journal. So we'll talk about the cash payments journal probably Thursday. Okay, so what kind of transactions go in the purchases journal? All right, so the purchases journal is strictly only for what we call purchases of merchandise on account. Okay, so purchases of merchandise, and I'm going to explain what this means, on account. We already know what that means. Okay. We're not paying cash up front. We're going to promise to pay for this merchandise sometime in the future. Okay, so we as the business, we are purchasing merchandise. So what is merchandise? That's not just any purchase. It has to be a purchase of merchandise. And for accounting purposes, merchandise represents those items that we are going to mark up the price and resell. Okay, so let's just take an example of Academy Sports. Academy Sports sells all kinds of athletic apparel, tennis shoes, running shoes, all kinds of stuff, basketball shorts, shirts, and equipment. Okay, they may purchase, office supplies, but they're not in the reselling of office supplies business. They're in the business to purchase sporting goods, mark up the price, and resell them. So anytime they purchase items that represent sporting goods, that's what would be considered merchandise for Academy Sports. Okay, so I don't want you to think, well, anytime we purchase anything, it goes in the purchase journal. Well, that's not true. It has to be a purchase of merchandise. And a business that purchases merchandise, these are items that they intend to mark up the price and then resell. Like a furniture store, when they go out and they buy 200 coffee tables, that's a purchase of merchandise. If they went out and purchased a van, well, they're not in the selling a van's business. They're in the furniture sales business. So purchasing a van would not be considered merchandise for a furniture store. Okay, just want to make sure I draw that distinction. All right, so anytime a business purchases merchandise on account, those transactions have to be recorded in the purchase journal. In fact, those are the only kind of transactions that are going to go in the purchases journal. So I'm going to do 3 transactions with you in the work together, and then you'll do the on your own problems that go along with it. So the purchase journal for Golden Fabrics is given. I'm just reading the instructions on page 254 for work together 9.2. And we'll need this information to help us with 9.3 on Thursday. Using October of the current year, journalize these transactions on page 10. All right, so I'm going to go ahead and put page 10 of the purchases journal. Purchase invoices are abbreviated as P. Okay, so when you see, well, let's just do the transaction on October the 2nd. We purchased merchandise. All right, that's a clue. Purchase merchandise on account, so that tells me that I have to use the purchase journal. That's the only kind of transaction that's going to go in this journal. And we purchased from Pacific Supply for $3,252. All right, so that was on October the 2nd. So just like we are used to doing the day, year over the month, and then the day. And the account credited is the company or the customer or the vendor that I purchased from, and that's going to be Pacific Supply. All right, the purchase invoice, that's my source document, is P162. Well, as far as I'm concerned, since this already is labeled as purchase number, you don't have to put the P again. You can just put the 162. It's understood that all of these they have a purchase number. All right, post reference, we won't do anything yet because we're not posting yet. And then 3252 goes in the purchases. Notice it's a one column, but it really represents 2 different accounts. And we'll see that when we get to posting later. It's going to be a debit to purchases and a credit to accounts payable. But don't have to worry about that posting part yet. That'll be tomorrow or Thursday. Okay, that takes care of October the 2nd. So now we'll do the 7th. Remember, you don't have to keep writing the year and the month as long as you're in the same month. We purchased merchandise on account from Coastal Company. So we're going to write in Coastal Company. And the purchase number is 163. Nothing yet in post reference. 532 in the purchases debit accounts payable credit. And then we had one more transaction on the 11th. And we purchased from Yeatman Designs. And that's number 164. And the amount there is $866. Okay, so as far as all we've been asked to do so far, we're done. Okay, everything else, as far as totaling, posting, that's going to be taken care of when we get into lesson 9.3. So you don't even have, I mean, if you want to go ahead today and come up with a total of this, that would be fine. You're going to need it for later, but as far as I'm concerned, you're done with work together 9.2, and when you do the same thing, you're just going to, when you do the on your own, you're going to do those 3 transactions in the purchases journal, and that'll be it for today. Okay, and then we'll finish it up when we get to posting. So I'm going to hold off on the posting part and we'll talk about that together on Thursday. So what I want you to do for today is the on your own 9-1 and 9-2. And then I want you to, because there are so many terms that you're going to need to know for this next test. I was looking at the test, and there's 20 matching, there's 10 multiple choice, and I think there's 8 or 10, 20 matching, 10 true false, and 8 or 10 multiple choice, something like that. So what I want you to do, instead of waiting until the day before to do the study guide, which is what we had to do, or a lot of times we did in first semester, I want you to do at least part of the study guide for next time. Okay, so the study guide's on page 197. The matching part 1 through 15 on 197, that will take, that's all of the terms that you're going to be responsible for lesson 9-1. Okay, so go ahead and do those today. And then if you turn the page, go to 198, going through number 15 on the next page will cover all of the terms for lesson 9-2. Okay, and that's as far as I'm expecting you to go, and we'll check these out on Thursday. So for the study guide, all you have to do for next time will be page 197, and then on page 198 you can just go through 15, because that just takes care of the terms involved in lessons 9-1 and 9-2. All right, so that is it, and we will continue on with talking about this new business type of structure, partnerships, retail businesses, and it'll be a big part of our new accounting work as we go through second semester. So I'll see you next time.